to talk about. In fact, let me also get in Ajay Bodke on this. Ajay, one of the factors that Deven mentioned was, of course, on the financialization and formalization of the economy. These two, in fact, have been the key pillars of Modi's policies over the last 4 years. Of course, there are many smaller parts in between, but on a broader spectrum, if we were to classify it as financialization and formalization, it's also reflected as far the market performance goes. Let me just pull up the sectoral performance for you. The Consumer Durable Index is the best performer in the last 4 years, 162% jump, followed by FMCG 66%, followed by banks 66%, followed by autos 64%. All of these are either related to consumption or in fact financialization. And the markets have rewarded that move from the government on these two pillars. How would you rate the government's performance on these two? And of course, what more needs to be done over here?
Good morning. I think financialization of the economy got a leg up, I think, after November 16, after the introduction of demonetization. And I think the former RBI governor is on record to say that a couple of lakh crores of money that was lying symbolically below the mattresses had no option but to be channelized into the formal banking channels, where it remained for a brief while, and then subsequently I think then an onward movement happened of that money into the equity and fixed income markets through mutual funds and insurance route. So I think one of the most structural positives that the market has had because of demonetization can be traced back to this move by the Modi government. I think to that extent, I think that the consumption part of the economy has been the biggest beneficiary of this move, and the investment part of the economy has lagged behind, essentially because the banking system is still saddled with lakhs of crores of soured loans, and the government is making an attempt along with RBI to clean it up through the extremely important structural reform of the Insolvency and Bankruptcy Code. But I think it will take a few more quarters for the cleanup to happen in case of PSU banks and in case of corporate-focused private banks. Till that time, I think the consumption part of the economy, and India essentially is a consumption economy. 65% of our GDP is private consumption. So that I think should continue to chug along at a very good clip over the medium term.
Absolutely. Let me also tie this in for us, because one of the factors, of course, in the last 4 years that's also worked for markets and this government have been benign macros. But now that situation seems to have taken a turn for the worse, whether it's rising oil prices topping out at $80, whether it's rupee at around 18-month lows, whether it's rising US yields, which is putting a pressure on FII flows into India. Things are turning to, look a little difficult as far as the macro pain for this government goes. In that context, what can the government do to manage the situation, manage expectations, because those two have risen with the government and the markets in the last 4 years, and of course, ease some of the pain that these macro challenges bring?
Yeah, I think it does look like that the oil prices, the new normal for the oil, has clearly decisively moved from 60 to 70 previously to between say 70 to 80, 85, and hence the pressure in the short to medium term on the India's macroeconomic fundamentals will continue to exert some pressure. So as you mentioned, I think almost all the key macroeconomic indicators, be it imported inflation, current account and trade deficit, or even the fiscal deficit, I think and the rupee will be under pressure due to the elevated oil prices. I think what the government needs to focus on is how to ensure that the leg up in the GST collections that one has seen over the last month, I think remains moving on northwards, and there is no faltering on the GST collections. Also, the government will need to emphasize more on the strategic divestment. I think one has seen some movement out there. However, I think no large strategic divestment has happened, although divestment of sale of minority stakes has happened in the market. So I think if the political climate is conducive, I think then the government will have to think of increasing collections through the divestment route. I think the other alternative is in an election year, it will be very difficult for the government to cut down on social spending. And especially I personally foresee that on health and education and agriculture, I think the government will have to up its spending as we move into a very busy election calendar going ahead. So I think the macros at the edges are fraying. But the good point is that because of the structural reforms that have carried out by the government for the last 4 years, the micros have started picking up. And one clearly saw the earnings bottoming out in the December quarter, and the numbers in the March quarter clearly are indicating that the momentum is on the upswing, with the sole exception of sectors such as PSU banks and corporate focused private banks. I think otherwise in consumption focused sectors like auto ancillaries, FMCG, and in retail focused private banks, one is seeing a very strong momentum of earnings, which in our view will continue to strengthen as we go forward in the current financial year.
Fair enough. So that's a fair assessment. You keep faith in quality, and if you keep faith in fundamentals, then you will be rewarded in the future as well. And making a differentiation as far as speculative money versus investment money goes. In fact, Ajay, add on to that points, and also, just a perspective on this final year of the government that's left, because now the speculation on the street is that the government will get increasingly populist as it builds up to general elections of 2019, and of course with a lot of key state elections still lined up. We've already seen farm loan waivers in a host of states. Something like a Maharashtra, already bereft of money, is now looking at further loans just to clear off the farm loan waiver that's been promised. That's going to add to some kind of a pressure on the fiscal front. In that light, if the government gets more populist, do you think that will affect market sentiment?
I think the last 4 years track record of the government clearly indicates that the government will stick to the medium-term fiscal consolidation plan. I think, the steps that the government has taken clearly indicate that it will not sort of, go in for fiscal profligacy, even sort of, when it is facing a string of elections. Even in case of fuel prices, we did see that in the run-up to some of the key state elections, the OMCs were asked to hold on sort of any price increases. But subsequent to the elections, again the price increases continued. So I think the government's resolve in sticking to the reforms roadmap, I think, is quite evident. And that's why I will not be too perturbed or worried that the government will sort of abandon its sort of gains that which has accrued to it over the last 4 years by sort of managing the balance sheet quite adroitly, and sort of go down the slippery slope of fiscal profligacy, which in turn sort of in an environment in which the oil prices are flaring up and the macros also on the margins are fraying, will add to the pressure. So I don't see any concerns on that count from the government's end.
Fair enough. So let's boil it down to Ajay, what's your reading over the next 1 year? And a similar question, do you expect this government to come back, and what would a popular mandate once again in 2019 mean for markets?
See, as Harold Wilson had said, a week is a long time in politics. So we still have sort of, nearly a year to go for the elections, and one will have to sort of, wait and see how things pan out. First in the crucial state elections in Rajasthan, MP, Chhattisgarh and Mizoram, and then sort of, one can take a call about what's going to happen in 2019. But as things stand today, I think the NDA government does look like having an advantage over the opposition. However, I think, with all the opposition parties coming together, I think it will not be a sort of a cakewalk, and there would be a tough fight, in my opinion, as we move into 2019. Now, some of the three issues that you asked for that the government needs to focus on, and the first is the rigidities that one is seeing in case of agriculture. I think the government needs to focus more on that sector and try sort of to ensure that those rigidities are softened to a large extent, and the farmers end up getting a large part of sort of the disintermediation sort of needs to sort of happen in that sector, and the farmers need to get a large part of what they produce. good sort of remuneration for that. The second thing is the direct tax code, I think, which has been in the works for some time. I think the government needs to expedite that. And the third thing, as I mentioned, is strategic divestments. Air India being the first on the block, but there are many more such strategic divestments that the government needs to do. These are three issues that I think the government needs to focus on.
All right.
There was a